Welcome to the new Barbarians Podcast. I'm Bill Mann.
And I'm Mark Connors. We're here to deliver insights on how current market events impact the traditional investment portfolios of stocks and bonds that Bill and I traded on Wall Street. Today, we see digital assets as the next frontier for finance and investment.
We're also here to explain how cutting-edge tools like AI and disruptive tech are the new barbarians at the TradFi gate.
So instead of Mike Milliken's innovation on debt financing with junk bonds, today's barbarians at the gate are changing the landscape almost daily across regulation, legislation, and finance.
So hit the subscribe button and let's cut through the noise together. Welcome to the new Barbarians Podcast. Today is Tuesday, June 24th, 2025. The podcast will hit platforms later today. Today we're joined by David Forino, CTO of Quanted Technologies. David, thank you for joining. I have a few notes about the market today, but since David is kind of a special guest, I'll just give a quick preview. David and Quanted were actually the first client of my company, Harmonic Insights. And we met about a year ago because I remember I was on a ballet trip with my daughter and we were doing Google chats in a hotel. So it's been a pretty cool journey for me, and I'd love to get into some of what we've been through together. We did a road show in New York last September, and then, we were raising capital over the winter. So yeah, thank you very much for joining us, David. And we're looking forward to not only talking about very technical artificial intelligence topics, but also to just share some fun war stories.
Yeah, thank you for having me.
I guess the big news recently is, bombings and things like that. I think factors and the markets are more or less behaving as you'd expect. There, I think last week there weren't really any statistically significant moves in this factor space, but you've seen a few, yesterday and today in the spaces we sort of expect. So rates and sensitivity to oil with the big moves in oil and presumably other commodities too. I'll take a closer look at that. But I also wanted to say sorry for kicking things off late today. I was caught in a meeting with another client, and then we had a few technical difficulties, but I'm glad we're live. I hope we get to hear from some of the people in the chat. If you have questions for David, I'll definitely make sure to pass them along. And with that, I will hand it off to Mark.
Great. And Bill, we're also bringing this from across the globe. I'm off the Bitcoin BTC Prague conference in the Czech Republic. I continued on into Bratislava, Slovakia, and now in Budapest, Hungary, going to Vienna later in the week. And I think, as I told David, Bill, earlier on the call when we were getting together, it's been pretty informative to be traveling through the Balkans during this time when we have upheaval, because it's a reminder that borders change, currencies, some are hard, some are soft, and that the world isn't bound by the east and west coast in the United States as many in the U.S. At least I definitely have that idea. I don't know, David, do you remember, or Bill, that classic New Yorker cover of a New Yorker's image of the world, which was 9th Avenue, 10th Avenue, Hudson River?
That was in my dad's office growing up.
No familiar with it.
They can make fun, like they made fun of being a New Yorker, and the New Yorkers, we all embraced it and said, yeah, that is how California is as close to us as China is. Like our perspective is just so different, so it's always good to travel.
It's the classic ugly American.
I wouldn't say ugly. I would just say parochial and willing to learn, as John Candy said in Stripes. So in that spirit, willing to learn, we're going to go into some market dynamics here. So let me share a screen. We're going to view some top-down, a couple bottom-up events, especially in the digital asset space. It just continues to be a pretty impactful year. And let's go into markets. So we're going to look at 5-day and year-to-date. I like looking at these snapshots. It's a bit of a contrivance, right? It's not showing you over time in a line graph, which I still think is the best. We'll touch on one of those. But let's look at year-to-date. It's been a tumultuous year, as we know, but the three standouts are non-U.S. equities, still up 18% year-to-date. This is through about 45 minutes ago. Bitcoin up 12.7%, and then gold leading all major assets. And you're looking at oil on the year look at that. I didn't even check that out, Bill and Dave, until now. Over the last 5 days, oil went from flat to down 9%, and we'll be looking at a line graph about how volatile it is, something that Bill touched on earlier. So over the last 5 days, relatively flat across everything, but let's look at the next one. We're looking at today, year to date, and going back a year. So we're expanding it to do more near term today, and then over the past year. Today, oil's down 4.6%. Over the last 5 days, down 9. Half of that happened in the last 12 hours. Not even. Bitcoin leads all up, and we know Bitcoin led everyone down over the weekend when Trump truthed, by the way, something we'll talk about in our Substack. It didn't come from the White House. It didn't come from Walter Cronkite's legacy media people. It came from Donald Trump's own social media platform that we had launched missiles. We have never in the history of the United States ever had that happen where a president announced a strike ahead of everyone on an unsolicited. So that's not an indictment or a support of the president. It's simply saying how media has changed.
I would also like to thank you for using the appropriate term. He truthed rather than tweeted.
Zeeted, X'd. Bill?
This is
you
not
can't make
funny.
this stuff up.
There's a war going on.
I know there are words. And we do we basically want to present what's going forward. Like David will be talking about the new data sets and the new schemas that are coming out, where the data is still sent in CSVs or Parquet form. I mean, the dynamics are changing. And I think on this call, we want to talk about, and Bill will put our names on, and we do, on what is relevant to look at. Make your own decision, but we're curating a bunch of stuff and trying to show you, maybe having a little fun along the way about what's relevant to look at. And so I think that markets are rallying. Bitcoin is a leading asset, up 2.4% ahead of all other assets over the past, on the day. And it also let it lower when the markets were closed over the weekend, I guess is my point. All right, so I said to everybody, I love line graphs because over time, this is year to date, people can know where they were. And here in this middle, hopefully you see my cursor, I work with a group out of City University in New York, and we were talking about this. And I said, this is what happens when geopolitical events occur, global macro. Everything correlates to one, the behavior. The market sank. Every asset went down. The one that least did so was the euro right here, which tells you about non-dollar embracement or an embracement of non-dollar assets. But we wanted to show this is because look at oil troughing at down 20% to be up as much as I think 5% a year, and now it's down 9% as we said. So stuff is all over the map. And it's one reason why we really stick to trends and understanding what is a variable asset or a trend where there's mercurial impact. What David's going to be talking about maybe is about how you can look at alternative data sets to help maybe cut out some of this slack and noise in the market. Not to put words in your mouth, David. So I want to then go into continue into what happened in digital assets. So as everyone knows, I'm focused on Bitcoin and the adoption. And Bill and I started this because he saw AI as a disruptor well before I did. So in the area of digital assets, several things happened over the past 5 days. The number one thing is that this Genius Act, which focuses on stablecoins. Stablecoins are digital assets that are backed by usually real-world treasuries. The majority are U.S. dollars. There are some others, but it's majority, I don't know if it's 95%, are basically digital dollars. So they need treasuries to back them. It was passed because the Treasury is going to be issuing a whole lot more treasuries, especially T-bills, in the coming months and years. So that expanded the market. A company called Circle we'll touch on had an IPO which will benefit from it. I think it's up, we'll go in a minute. But what I want to talk about this here is a trend. Look over the past 10 years. I don't know if Bill or David, you've had seen this. I knew that MasterCard and Visa had outperformed banks, XLF, and the S&P, but I didn't know to the degree that it had. Where MasterCard MA almost outperformed the technology ETF, XLK.
Those are some killer margins. but yeah, I didn't realize it was quite that big.
So the reason we bring this up, 10 years, what's new? Let's look what happened in the last 5 years. That trend all but reversed, or did reverse. XLK, tech, up 25 times, up 15 times. We're talking about 10,000 start. The financials index, banks, outperforming the S&P and MasterCard and Visa. So they were great margins, Bill, and now they're coming under pressure. And this little move down is what we're going to talk about next. Circle. This is year to date. I switched from a 5-year time frame to year to date. We already saw that, MasterCard and Visa weren't performing as well. On a year to date basis, it's a little more compressed. Circle, the IPO happened this month. It's up, 15x. And it is up because of the Genius Act that we mentioned, because they are one of the first approved stablecoin issuers. So certainly well ahead of the opportunity, meaning they're trading at a large multiple to their revenue or earnings. But this tells you the direction of travel. The administration has stated that they want to reduce taxes, they want to reduce regulation, and they want to grow, baby, grow. This digital asset revolution, look what it's doing, and look where MasterCard and Visa have already gone. They are old tech. They were new tech, they're old tech, and this is the future tech. So it wouldn't be a Bitcoin call if I didn't have what Bitcoin's done over the past 5 years. So MasterCard and Visa did quite well, but Bitcoin's done a lot better. Circle is down here. Look at this. Over the past 5 years, on a return basis, Circle has outperformed XLK, the technology index, XLF, the financial index, SPY, MasterCard, and Visa in a matter of 3 weeks. You can call it a bubble, but bubbles don't last 16 years. So with that, I'm going to pass it back. That's, as they say, my thoughts from the cheap seats here in Budapest, Hungary.
So I do have some questions prepared for David, but I was reminded of my trip to Italy back about 10 years ago. We went to Rome and Tuscany, but when we were in Rome, I got to go to the Colosseum, and I more or less tried to recreate the scene from The Way of the Dragon when Chuck Norris fights Bruce Lee. And, so on the topic of like ugly Americans and things like that, I just wanted to say that I went there and intentionally got a picture of my wife and I sort of posing in that classic fight scene when Chuck Norris unfortunately does lose his life. But, that's kind of the way that
it's a game.
Bruce Lee had to, end things. On that note, David, where are you from? And, how did you get into quant finance? I think we teased it a little bit that you spent time at Volkswagen, but maybe start off with where you are located right now, where you've been.
Sure. So I'm located now in Tuscany, in Italy, and pretty close to where I was born, although I spent quite some years before in Germany, as you can expect, since working for Volkswagen. A pretty diverse background. So I didn't start in the finance industry. I actually started with robotics initially. Then moved to Germany. That's where I moved for the biggest robotic company in Germany was KUKA system, all those robotic arms. Then I moved to Volkswagen, one of the sub-companies of Volkswagen, where I was the head of AI there. So heavy into artificial intelligence back in the day also. And I like to say I'm in the industry way before it became such a hype, let's say. So even actually, I started even before TensorFlow was even a library. So for the folks that are using TensorFlow, they can imagine how long that is. Yes, and my connection in the finance industry, part of my personal interest in general, I was also helping family offices and trading shops implementing AI solutions into their predictions.
And what year was that, David? AI solutions into their?
That was actually concurrently. Meanwhile, I was also Volkswagen. That was my freelancing. So that was. I'm saying 5 years ago, about 5 years ago.
Got it. Because the majority of people, including this guy, AI started in November 23, which I then countered Bill on. I'm like, no, Bill, the first thing with OpenAI was 23. He's like, no, it was November 22, but it's okay, Mark. people think that.
Yeah, I mean the big advancement happened probably around that time, I have to say. But yes, there were a lot before it as well.
It was fairly disruptive
Yeah.
inside a place that was, you know, making a lot of advancements for a long time in the natural language processing space. You know, since Mark must know a lot about TensorFlow, I'll also just ask you, David, what kind of an advancement was that? You know, I remember it, but what exactly is TensorFlow, and why was that a big deal?
So TensorFlow was, if I'm not mistaken, the first deep learning library open sourced and developed by Google. And it was a big deal because all the development of neural networks without those frameworks was a lot more tedious, and in general was taking a lot of time just to develop. So that was the first framework that was making everything much easier, especially backpropagation and so on. I don't want to go too deep.
Yeah, and so I guess I also remember scikit-learn coming out, and like from my perspective, it meant like I don't even need to understand what this is or what it does, but now I can use it. And you know, like if I have access to a Python environment, I can now run a model that's, you know, using deep learning. And what that also means is like one line of code instead of like, how many do you think, if you wanted to, you know, build your own version of a TensorFlow, like how many lines of code do you think that was?
It depends, of course, on the complexity, but if you would have to build the training cycle, the backpropagation and so on, probably 2,000-3,000 lines of code if you're well experienced developer, I would say.
Right. And if you're messy,
So
you know, it's impossible,
you could take
period.
a
That,
million.
yeah.
So
But
David,
no, it
for
was
the
a big deal.
for the unwashed on this call, which I am one of them, can you explain TensorFlow, which was what, like 2015 or so? Is that
Yes, around that time.
around that period? What's the analogy for, you know, is it Intel chips? Was it 0 to 1? Like, as far as structure, you know, internet adoption went from, you know, dial up to modem. I don't know what the analogy is, because when you say from one line to from 3,000 line, or like that sounds like a compression. Is that the wrong term to use?
No, it's pretty much the code being developed by very experienced software engineer that have done all the complex part of it, so leaving you only a high level, easy to use interface for it. Although at the beginning when it was released, it wasn't a line of code, it became now pretty much a line of code also with these add-ons and so on. But still, I would consider it probably, if we're talking about chips, from the 32 bits era to the 64, big of a jump.
Hey guys, if you got anything out of that last segment, don't forget to like, comment, and subscribe. It really helps us grow the podcast and bring you great content. Thanks for the support. So we have to get into Quanted now. When I got to know you, I found you on LinkedIn, I believe, and we just caught up, and I think, you know, over time we pivoted with Quanta, but maybe since, in the interest of time, can you just tell us what Quanted is, and you know, share materials if you have them, but what's the most basic explanation of what Quanted does?
Absolutely. So we are an analytics platform that connects quants with data vendors. So what our value proposition is really giving the possibility to hedge funds, investment banks, asset managers to discover valuable data sets very, very quickly, to test and see their value before they actually go and purchase those data sets. Currently, there is this problem that testing data requires a lot of engineering time and effort, and most of the trials don't end up converting because they don't see the value with the investment thesis of the fund or the PM. And that's where we pitch in. So from one side, we partner with vendors, getting their data, doing the typical work that a typical quant would do, from cleaning the data and create feature engineering, which in the end is time series data of ratio that explains what's going on in the market. And then we have an engine, AI-based, that is able to find a relationship with the models that those quants develop.
Cool. I think that we can assume that most of our audience, is pretty conversant in like what systematic investing is. Therefore, we're using data and computers to automatically trade things, and these trading systems are rules based. And a lot of people have probably heard about factor investing. What's really interesting about Quanted is it's AI. To me, that typically just means non-linear drivers of these rules, and economics are easier to observe when you have a linear predictor rather than a non-linear one, and so it's just harder to understand, and you really need to rely on computers to even find these things. So that's all really cool. But what's really cool about Quanted is it solves a problem that everyone has, unless you're like stuck in this world where I've been for 15 years. Like, you just don't appreciate it. And I don't know if we stumbled on it or if it just became more of a focus, but the fact that onboarding data sets and making features for various types of models like freely accessible is super valuable. So like, how have you found clients' feedback when it comes to that? I was personally surprised that we are getting very good feedback from like larger quant funds. I originally thought this is a great product for emerging quants that haven't built a lot of these things, but like, how's the feedback been on this data onboarding and productionization problem that I just complained about?
Sure. So, well, the feedback has been very positive. That's why we are now doubling down on this and really pushing to offer more to our existing users. The issue, even at the larger firms, is that what we've noticed, they typically cap out around 100, maybe the best could reach 200 data sets a year in terms of trials. And it's really, really a time-consuming process before an engineer can even try and see how a data set looks like. They need to go through legal and compliance. Then they need to deal with the messiness of the format in which it comes from. Like you touched before, Mark, something comes in CSV, something comes in Parquet, something has different formatting, different delivery methods. When all that part is taken care of, then it's where Quant can actually start to work on and see if there is any alpha in there to make any prediction. And as mentioned before, most of the time this doesn't end up converting, doesn't end up being that valuable. So all these weeks of work, we have estimated on average that typically takes around 3 weeks without the legal and compliance part. So just pure engineering to evaluate a data set. And we are able to do this at a massive scale that can take 30 minutes pretty much. So we really crunched it down. And the reason we did it is basically free doing this feature engineering. And
David, someone's going to be throwing the flag on you on that. You just said 3 weeks and 30 minutes. I know we'll be getting calls. So, and Bill, you've I know test driven the program. That's massive. And this is not a shilling comment. This is, I'm working with Bill because, our point is AI just compresses time done correctly and with guards, right? I had one agent tell me that Donald Trump truthed on Wednesday. I'm like, I don't think it was Wednesday. I think that was Powell truthing. So there are errors on data collection, but you're talking about the execution abilities of AI to drive output. That doesn't sound like 32 to 64. That sounds like a bigger jump. And I'm not goosing you. Am I wrong on that?
It is a big jump. We've been, for sure, there is a lot of optimization in the software, in the advancement on the IS. The AI that we use is relatively lightweight, so it's able to compute faster. Plus, all this explosion in hardware advancements definitely help us out in the computation time. Just to make an analogy, running this on a Raspberry Pi probably wouldn't take 30 minutes, so we are also advantageous by that. But yes, it is a big deal. That's why our customers are supporting and they give a lot of good feedback.
Well, I think that that's also where, decades of suffering, a place like Volkswagen or had large quant funds before, the cloud was available, and it was just difficult to get access to these things. And then you had 3,000 lines of code. And I did ask David 15 different ways. How is this possible? Have you tried this? Are you sure about that? And yeah, he convinced me. And the fact that he did spend all that time at VW and knew what I was talking about. A lot of times, like, your fear as a product manager or a researcher is you're speaking a different language with an engineer. But I believe what David is telling us is the truth. I actually got another question in the chat. And anytime we do that, we have to definitely give attention to that. So I'll just read it. Great question, Bill. This is the previous question. To add to your question for David, how does the user feedback compare in centralized data teams versus pods?
So we have, of course, limited visibility on the feedback side. Just to give you context on this, what we do is having on one side all of this data that we process, but on the other side we give this prepackaged software that runs on their premise. So we tend to rely only on the actual feedback that the quants or the PMs are willing to give us. So there could be probably a lot more than what I'm about to share, but just to give you context on this. Usually for the individual pods, they tend to be focusing more really on the performance wise. They tend to look at, given this data set, how can I maybe find this additional set of data that can help my strategy? Can I only touch on that on the settings that you have? Is it any possibility that we can add something to filter additionally the data to dive deeper? Because we need to, in a certain way, also keep it pretty anonymized, the data that we have before making any referral. Also, to give in context, we don't handle any redistribution of the data, but we are pretty pure analytics. So once we have found something, or the quant feels that they found something, we just do a referral to the actual vendor. Of course, they would like to know in advance what are those vendors and dive deeper. Due to business model, that's not possible. And then going back to the question, the difference with the centralized data team is that, of course, they care more about aggregates, right? So they say, okay, if there is one data set and this is valuable for one pod versus 10 pods, then of course the ROI on that data set can mean a lot to them. So it's just a matter of perspective. So centralized data team, they just want to see the aggregated view on it, whether instead individuals want to just care about doing the best that they can with the resources they have.
Makes sense. And can I ask in specifics, as we were talking, when I was at Credit Suisse, we had a sentiment data offering based on aggregated anonymized data, and we speak to those centralized teams at all the funds. We would give them, 5 years of history, dated, 6 months old, and they'd run them, and we'd have engagements. They would make requests for new. Are those the folks that are hitting your catalog up, who are the centralized teams, and the pods also individually may be calling you up, or am I not understanding the interface of how Quanted works?
No, pretty much. I think pretty much is exactly as you described. Of course, we need to maintain anonymity and also a level of obscureness to what our software is doing and when the user uses it, actually. So we have very limited visibility of for example, we don't know what the analysis has shown to the user. So they are fully in control of the reporting, the model that has been developed. We don't see anything, pretty much. What we see is only, I'm making so many requests to the server to make so many runs, and that's it. So that's why I mentioned this before. The feedback that we get, it's filtered. We don't have like a typical SaaS, all the analytics of what's going on.
Cool. And I remember pretty early on also telling you about how paranoid quants are, and like we may as well cover security types of questions. I know that our marketing materials are there, but like how do you manage the like typical IP concerns of a quant fund when they start working with you?
Sure. Let me just share a document with you for the audience. So the way the system, I made it very, very short in 3 slides. The way the system works, as mentioned before, is made up of 2 components. One is our data lake, so containing all the time series of engineered feature that are derived from the raw data that our partners give to us. And then to the users, we send a Docker container. So everything is self-packaged. They can run in any environment they like. But the way it works is simply uploading a CSV file to their Docker instance. And the CSV file contains the performance, the historical performance of the model that they've created. This usually end up being one of two possibilities. One is actual forecast. So let's say they might have developed a model that creates forecast on volatility, next day volatility, I don't know, for SPY. And the other option would be actual signals of taking position to certain stocks. So these are the two kind of configuration. Another way, what we take is the timestamps of those CSV files so that we can request the data from our lake. And then from that moment on, all the computation and analysis runs inside of the Docker container. So we have no information at that point of what's going on, what's been recommended, and anything else. The user, a part of the CSV file, has, of course, some configuration that can choose from. For example, the certain parameters of the machine learning model, filtering mechanism, also the data sets, the category or group of data sets that they're interested in looking at. And what happens, there is this automated feature evaluation, feature selection. So I don't think I mentioned it before, but this technology is pretty much a sanitization layer. So if you're making prediction on a forecast on what's going to be the volatility for tomorrow, for example, then your model is going to be off by a certain amount. The sanitization in this case would be that the system is looking from all the data that we have, all this time series, all these engineer features that we have created. If among those features that represent market states, certain consistent pattern that help the machine learning model to make correction to the actual forecast that has been made by the model developed by the Quant. So pretty much what happens is, given a prediction, we try to, with machine learning, get the residual error, it's called. So this error in prediction versus actual, and try to make those adjustments. If we see that the adjustments are consistent and consistently the model overall performs better, that's when we see, okay, there is value in this data set by certain metrics. And then we are able to provide full analytics to the user and basically recommend that data set. That, of course, can be expanded not only to a single model, but of course to aggregate. So they would try 100 different models and see consistent data sets that across the whole provide a pretty good performance increase. And of course, we are all about interpretability. So black box for us is not really a thing. What we provide is explainable AI, explainable machine learning with a lot of analytics, understanding how the decision is made by the machine learning. This is absolutely crucial, together with a lot of statistics and correlation and many other statistical analysis.
Cool. Thank you. Is that your first live demo on a podcast?
Yes, indeed. It's actually my first podcast ever. So a little bit nervous, but yeah, enjoying it a lot so far.
Well, yeah, you're doing a great job. I could not tell you were nervous.
I am. Like most of the engineer and data scientists, we're very good at numbers, and then in front of public, we're always a little bit more nervous.
Well, you can't be nervous around me. We've known each other. And
That's
you know
true.
that
That's true. I know you well.
You know that I joke around and I'm not too serious. So, and I just picked up Buster. He's been like refusing to spend time outside because it's so hot. We did get another question in the chat. What is ski kit learn? I think they meant to spell it with a C rather than a K. But yeah, I guess for those who are less familiar with the technicals, like, can you elaborate a little bit on scikit-learn?
Scikit-learn is a library for Python programming language that is pretty much a framework, a collection of many different machine learning algorithms and methods that is open source, first of all, so it can be downloaded and used by anybody. Everybody can look at the source code and pretty much helps speed up the development of machine learning application. So it's not really focused for LLMs or deep learning, but for anything else related to machine learning that's actually very popular.
Cool. So another question that actually came in ahead of time was, why was this solution not proposed before, the Quanted data bridge solution? And then did recent technological advancements enable you to get to where you are today? And what does this mean for the users?
Yes, there are different, so there's many questions. Let me take it.
Yeah, three questions. If you need me to repeat them, just let me know.
No, good. So first, I would say that the biggest problem is happening now, like in recent years, and a lot more to come in future years because of this explosion of data that we are keep on collecting, and the easy for companies to basically process this data with LLMs and derive analytics and insights. So there's going to be, I was speaking before actually with Mark about this, that is expected in the next 5 years to, if I'm not mistaken, quadruple the market of alternative data sets. So there is really this big bomb of data that's going to be dumped in the markets, and analyzing it all with the current technology without Quanted is actually an issue because of maximum capacity. Like mentioned before, even top hedge funds at I think about 100 data sets a year, so they wouldn't just simply be able to test all of them as they come along. And I remember that data equals profits pretty much so you use data to make prediction. You need to test as many as possible as quickly as possible. So probably also before, like 20-30 years ago, there wasn't this explosion of data as it's happening now. That of course creates much of a bigger issue. And also why wasn't it done before? A part of this is this is also possible because current technology has been evolving and moving very, very quickly. So just to make a few examples, as we were talking also before from the hardware perspective, definitely the compute power has been exponentially increasing over the last few years, and is becoming increasingly affordable. Also, I think we discussed last week or so, Bill, the fact that you can now buy very powerful hardware that is from enterprise-grade hardware from last year, 2 years ago, that is extremely affordable. So it's been pretty much democratized, and the barrier to entry has been reduced from a hardware perspective. On the flip side, from the software wise, of course, with the advancement of LLMs and all these coding agents, they can really help speed things up a lot in terms of coding assistant. I'm still not a fan of letting the agents do the entire development of the code, because I think we're not there yet. Specific in quant finance, there is a lot of mistake fundamentally that can be made by those models. But at least in terms of creating good, well documented and scalable work, or even just accessing the documentation of different libraries, is really speed up a lot of development. Whether instead in the past it was much more tedious and you need a lot more engineering time.
Hey guys, if you got anything out of that last segment, don't forget to like, comment, and subscribe, as it really helps us grow the podcast and bring you great content. Thanks for the support.
Well, when we talk about allowing the machines to sort of operate autonomously, which, I think in our parlance, you would call that like unsupervised machine learning. And then if you have a bunch of agents that are off, executing code and writing it on the fly, I totally agree there could be many sources of error. But I also wanted to go back to the beginning when you said you started in robotics. Like, two-part question. What exactly were like robotics 30 years ago? And what's your favorite movie that has like rogue robots, or, they could be good robots, but yeah, two-part question.
Sure. So I'll start with the movie first. I think I might be a little bit not that original, but I think Terminator is my best movie about robotics.
It's
Usually, what
clearly
people
the
associate.
best. There's no debate. I agree with you.
And yeah, in terms of robotics, well, I started in the industrial robotics. So it wasn't really like humanoid robots moving around like Boston Dynamics, but more like those arms with different degrees of freedom that would do different tasks. For example, in the automotive industry, there the replacement indeed of humans for welding the frame of the car or placing parts all together. I actually started using those robotics arms for machinery, so for milling and drilling and different kind of materials, and it was for even creating some statues of different materials. It was more for artistic kind of use. So interestingly enough, yeah.
That is
Now you're just
super.
showing off your Florentine flavor there.
Yes, indeed.
What's your second favorite robot movie? Just kidding. Um, so I do want to try and get a little bit more technical, and then we can definitely try and enjoy some fun chatter. Is Quanted using like traditional ML or deep learning analysis? And like deep learning is like approximating the human brain, and it's super complex, I guess. Like I like traditional machine learning because I can, in theory understand it and sort of bring it back to, econometrics. And so I was trained to think about everything in terms of linear relationships between two things. And so, linear regression is just linear algebra, which is, rise over run. And like, hopefully people can remember that. And whenever I try and demystify what quant research is, that's what I'd say. I'm like, okay, do you remember when you learned rise over run? Like, this is basically what we're doing. But yeah, can you just elaborate a little bit more on the like traditional AI, which maybe that gets us even back to that scikit-learn versus TensorFlow. But yeah, like to just dumb it down a bit and maybe talk about how Quanted identifies features with these tools.
Absolutely. So yes, we use traditional machine learning. To give you an example, those would be, for example, random forest type of models or tree-based models, some clustering algorithms, or even linear regression. We don't use deep learning, not because we can't, but pretty much because the industry doesn't want it, or at least the clients pretty much have expressed some sort of friction when tapping into deep learning due to explainability issues. There are many methods that throughout the year come out that helps make those deep neural networks more explainable, although they're never really fully explainable in my opinion, because the degree of dimension that it uses makes things complicated for a human to digest. And so we focus definitely on the more traditional side of machine learning. The reason also, my personal belief is that people typically tend to go to very complex models to do something that works well. As per my experience, except of LLMs, which are a very specific case, if you're able to achieve good performance with a simple model and spend more time on feature engineering, for example, so to processing the data that goes into the model, that's much more effective, it's much quicker, and is easier to explain and digest. So since we are not trying to replace the work that quants do, we just want to enable them to get insights. We tend to spend a lot more time into processing the data and creating those useful features. And then we focus on this traditional machine learning to make it very easily explainable and get the insights out of it.
So you're seeing the demand actually for less neural chaos driven or less explainable approaches on the feature derivation. Is that right? Or is that am I approaching that correctly?
Yeah, I mean, no, in general, in this industry, sometimes we could even argue that, with deep neural networks, you could achieve better results. So why not using more complex models to make forecasts? Well, the issue is really from what happens when things go wrong, because they will go wrong eventually at certain points. So you need to always be able to explain why things went wrong. And if you're not able to explain it, then you have a big you have a big problem.
David, is it an analogous? I didn't deal with the neural networks when I was in risk management. We dealt with just simpler statistical models. And the one I didn't like a lot, other than a what if, was a Monte Carlo. For a similar reason, where it could spit something out at a 99.9. It didn't really tell you where it came from. You could look at the distributions, but it didn't have sometimes explainability across that would tie it to that moment. So I can understand that. And is that a legacy issue with people? And if you were, and you're not, the portfolio almighty, and if you had to create the best portfolio approach in the world, would you say that it's people holding back because they're still in a linear approach to life, and that the future is having a process where we are, quote, trusting and bounding these more prolific models? If you had from your seat, do you see the evolution of firms that stick to what their people want, which is a linear approach, explainable, that might be a disadvantage to others who are looking to embrace the nonlinear approach and be open to a non-explainable outcome?
Well, in a way, I think so. I think mostly the issue from my perspective is you can go to more complex model as long as you have certain fallbacks, certain security measures. Definitely, if you're it's like having a very simplistic forecast or strategy that might work well, but in general, just speaking at a very high level, if you would tackle the same problem from multiple angles, that's pretty much what nonlinearity does, would give you an advantage. Of course, it's the issue, I think, is that most of the times, since we spoke also before about those libraries and TensorFlow, it's very easy to create models. It's very hard to make sure that you have created it in the right way. And that's where the issue comes in. It's very easy to have very great backtest or synthetic results, but then if you don't know all the steps, what's going on and how the old system works, then definitely you will have very bad surprises that will create to non-technical some questions and whether that's really a technology to even consider, because at the end you always need to report to somebody higher than you.
Yeah,
I think also you may need to explain things to someone who's very critical of you someday, and as a fiduciary for someone's retirement assets, like I personally don't want to have to explain the computer was doing something and it told me something that worked really well, and that's why I did it. It worked really well when the computer told me. It's not a very defensible thing when you're talking to regulators and people like that. So, a lot caught up in this AI craze. And then, I think that there's an important reality. And it's kind of what Mark is alluding to, even getting back to the old risk management days and the tools. The Monte Carlo is great. It's a cool way to play around with things and guess worst case scenarios and sort of what's the probability of this crazy thing happening. But yeah, what good is it to explain something that actually happened? And, I guess I can go on and on about why I still like being a classically trained econometrician rather than, even data scientists now, I think, are overusing some of the advanced tools that are so powerful and so cool. But even when I see something from one of these powerful tools, I'm like, okay, well, let's do it the old way, and usually you can, and then I'll feel a lot more comfortable that the thing works. I think you probably get this a lot too. Someone likes the feedback and then they're like, oh, well, why? Can you just show me the classic way that this might work? Which gets more complicated in the non-linear space, but there's typically an explanation that at least makes sense. So yeah. I guess I may have teed that up a little bit, knowing that I like Quanted as well.
Yeah, the analogy would be like if you have some symptoms and you're just shortcutting and us, one of these LLMs to tell you what do you have, rather than just going to a doctor that make a proper visit. So it's faster, not necessarily that's correct. And say, yeah, I'm just taking this medicine because my LLM told me to do so. That isn't really reassuring.
Although I will say there is a good analogy there. When I use LLMs, typically I use 4, and then I build consensus and I ask them to, and I'm feeding it back into these things constantly. But like usually I'll say like, what's the consensus and what's the contrarian within this group of 4? And that's kind of like when you go and get a second, third, fourth opinion for, an important surgery or something. So like, again, when it's fiduciary responsibility for someone's assets, like you better be very sure that you're doing the right thing and using the best judgment, which is only available to humans for the time being. So I guess I just have to comment that Mark blames, did you say Budapest for your Wi-Fi problems, like David's in Tuscany?
But currently, actually, I'm on a beautiful island in Tuscany. Very close
On
to
an
the
island.
coastline.
They have good internet on islands.
I have great cellular data. It works like a charm. There's a lot of 5G everywhere, so it's pretty reliable.
Nice. Why did I not know you're on it? What island are you on?
It's called Elba.
Yeah, so we
It's a
know.
very tiny island, very close to.
Well, someone famous spent some time there, right? Who was that?
Napoleon.
See, I'm not an ugly American. I even knew where
here.
he was exiled.
Here.
He was exiled to Elba, which is a beautiful place, right? So that's
Absolutely.
they probably had a lot of respect for him, jailing him on a beautiful island. And then didn't he like stage a return from Elba, or was that like where his final destination was?
I'm not the best at history, to be honest, but I think that's where he ended.
Okay, yeah. He was exiled at least once, and then I think he just came back one time, and the entire army was like, "Yes, we'll go right back to him," or maybe that was glorified in the movie or something. But I'm pretty sure that was actually the case. He was very well liked in France, I believe.
Yeah. Yes.
Cool. A little over an hour, so I think we have a few more minutes. And Mark, what's going on with your trip over there? Like, did you see anything cool at the conference? I hope I didn't miss, part of your recap earlier, but it seemed like you had some cool things to share.
Yeah, just being in Prague and meeting with people, even in the Bitcoin community, which is a narrow community, meeting with Europeans and cypherpunks who are from Europe, have a different approach, and I think are sensitive to change more than us in the U.S. So when it comes to things like losing control of your money, where I think in Spain, if you want to take out $3,000, you have to give 24 hours notice, have a reason, tell people why you're doing it. And I think the UK just did the same thing for $10,000. I'm not sure that there are restrictions on taking money out. So those are things that are just absolutely alien to us on balance. I know there's a $10,000 reporting limit, but you can do it. It's not a big deal. That part is always good to travel, and then just using different currencies. We had a guy on stage talk about how his family in Italy in the 60s, his parents had saved in 3 years in British pounds enough money to buy a house in Italy. And the idea there was that if you want to get wealthy, you save in strong currencies and spend in weak currencies. And being in the U.S., we have no concept of that. Travel is excellent, because you see people, especially in Europe, where you can 20 minutes away is a different country and there's an arbitrage between currencies. It's like being trilingual. Your brain gets to operate differently. So that's what I got out of this trip. And I think those changes are being visited upon the U.S. in different ways, with things like housing going up faster than wages. So we're experiencing it differently, not in currencies, but in scarce assets. So Bill, that's my takeaway, is save in strong currencies, gold, housing less so, Bitcoin, and spend in weak ones like the dollar. Have at it.
So what is the exchange rate right now with the euro?
I think it was 113, 115. I don't have it offhand. You know why? Because I've been doing more check, where it was 1,000 check was equal to $48. And then we just did, Kelly, we did Florence, I think. So Florence, we just got here to Yugoslavia, and shoot, we took a 30-minute cab ride for 6,000 Florence. I think it was like $18. So I know that a 30-minute Uber ride in New York City is going to be more than $18. Just to, the whole idea about saving strong currency dollars, spending weaker Florence. So we're living that. And I think until you do that, you don't appreciate the fact that, why I'm in Bitcoin is, Jesus, I'm very happy that I started saving in Bitcoin years ago and spending in dollars. It's been a good do. So travel to the Balkans, you see borders change, you see currencies change, and it helps you plan the future. That's my takeaway.
Cool. Yeah, I think the exchange rate was like $1.40, maybe. $1.40, $1.50, like 10 years ago when I was there. So,
Yep, that's exactly right. I was in Italy about 15 years ago. It was $1.45, and obviously it's a race to zero with all the fiat now, because of spending and entitlements. And best way to stay in office is to, who was it, Marcus Aurelius, when the electorate finds out where the treasury resides, they come by with their hand out every afternoon, and that's where we are.
I know something about it because my wife is Polish and they have zloty, they don't have euro. So when we met in Germany, when we were in Germany back then, we were also arbitraging pretty much, like getting German income and spending in Poland. It was a good arbitrage. And in Italy, you can still do it despite the currency being the same, still have different prices on certain
You do.
things. So you can still buy a very, very affordable house despite it will be in Europe.
Oh, I do have another question. Can crypto become a universal currency if you travel?
Bill, there's crypto and there's Bitcoin. Come on, man. We've gone over this.
No one cares about the difference, Mark, except you. Yeah, like, I think Bitcoin... I think
we have been fighting here, even on the NBP.
Our chat didn't make that distinction, but I believe they probably meant Bitcoin.
Will crypto become an international currency?
Can crypto become a universal currency if you travel? I mean, I think that you can take money on your ATM. I have crypto on Venmo. Like, pretty sure the answer is yes, and there is an advantage to, withdrawing funds in something that's not like depreciating while you're there. But yeah, obviously you might want to keep an eye on the volatility and the price of Bitcoin.
Yeah. There's incentive structures, like the stablecoin bill just came through. So so incentive structures are there for the U.S. to be like, what? There's $240 billion of these digital dollars out there, and they're backed by treasuries. And someone named Tether is like the 7th largest treasury holder in the planet. And they're 35 people who are based in, God knows, Montenegro or Bermuda. I forgot where they are. And they own more treasuries than Germany. How does this happen? Can we get people to buy more? And the answer is yes, you can. You can have more stable coins that require more treasuries. So stable coins, which are digital dollars, are going to be all over the planet. Yes. The next one is Bitcoin or others. Will they be? And you're right, Bill, in that they're more savings than spending now. So over time, you'll see that happen, I think, as incentive structures change and countries realize they want to go up the tech curve and not down it. So that's my prediction.
I'm not sure if you're a big Bitcoin or crypto proponent, David, but if you have anything to share on that, feel free. But also, do you have any questions for us?
So I'm not an expert on crypto, absolutely. I think maybe on Mark notes, maybe I was more interested in do you think that transaction-wise, in terms of speed, would stablecoins be able to hold up? Because I know that there are different cryptos, somebody is extremely fast at handling money transaction. I think if the entire globe would use crypto for everyday payments, then you could probably happen an issue with waiting 15 minutes for a transaction to happen. You see that as an issue?
So, David, great question. Right now, there's the transaction and the settlement. And the transaction can be seconds, and the settlement can be days or longer. So that lag is costing banks money. And if you set up a certain blockchain, the experience with Circle and others, Tether, is that settlement and transaction occur relatively quickly. And then there's also layer 2s that can maybe handle transactions quicker, like in Bitcoin on the Lightning Network. A layer 2, without going into it, it's kind of intuitive what a layer 2 would be, that you don't sacrifice security. You can have smaller transactions happen immediately and they become settled, minutes later. But there's the technology will, and it has, collapsed that time without losing integrity. And that's the balance, to accommodate that T0 without giving up the integrity of the settlement of the transaction and the security. So the answer is yes, stablecoins are currently structured to handle that all but T0 and the integrity of the transaction.
And Circle gets to keep all of the...
Don't get me started, Bill. Don't get me started.
Like the staking yield, right? They don't pass it along? They're
not allowed to yet because of it being deemed a security. And that's why Tether has $3 billion of Bitcoin. It's the amount of revenue per employee is astronomical compared to every other because of that disparity. So yes, there's a reason why Circle stock is, again, higher than technology, banking, S&P, MasterCard, Visa. In 3 weeks, it's made more money than the others in years because of the opportunity is so big. And banking is so slow. Its tech stack is so old and inoperable. And these guys are starting out clean out of the box.
I sure do want to start talking more about crypto because I'm continuing to educate myself and find some very interesting, what I'll call even regulatory arbitrages at this point. And I think there are just advantages to getting into things early as they're gaining adoption, and it's pretty exciting stuff.
It is. And beware, there are still scammers out there saying, I've got a Bitcoin product that's great. Just because they say Bitcoin doesn't mean it's great. Just because they say digital asset non-Bitcoin doesn't mean it's bad. But eyes wide open, folks.
Oh,
but get
certainly.
Curious.
Yeah. I think we don't give investment advice. And in fact, if anything, the old me would criticize the new me for my interest in taking risk. But yeah, like that whole buyer beware thing is obviously like massive. I'm certain that there will be another headline about some crypto thing and people get freaked out.
But Bill, standing still is a losing game right now. If you sit in treasury bonds, you're killing your family's future. And I say that, I will caveat that by saying that in the last 15 years, you've lost money if you stayed in the 10-year every day. You've lost money. Not even real nominally, you've lost money. So that's...
I was going to end that thought with a plug for Bitcoin because I think, of the options you have, and I'm learning about staking yield and borrowing and leveraging up your crypto and, all these different vehicles. I don't even know, within the smart contract space now, you can't even really define what these things are. They're not securities. But Bitcoin, I think, is something that you can understand. There's a finite supply, and it's an asset, and it belongs in a portfolio for its diversification benefits. And, I just don't think you're talking about losing, especially like permanent loss of capital, going long an asset that's safe. So there's my plug for your beloved. And yeah, David, do you have any closing thoughts, or did we fail to? So yeah, what about where can people find you? Social media.
Sure.
What about if people want to, get Quanted installed? What are they going to do to find you?
Absolutely. They can check us out on Quanted.com. On LinkedIn, yes, I'm also very, very active. So if you just look for David Forino, Quanted, they'll find me. Yeah, I wanted to thank you both for the opportunity and the nice questions and the nice chat. I hope I also was covering all the points for the audience, and really enjoying this, and definitely way more into having more podcasts to come for sure.
Well, you're certainly a very cool, calm, collected guest. You're welcome back anytime. And it also just occurred to me that we can do one more plug. David distributes a lot of academic quant research, and he's got a few publications, one being the Roundup, which is weekly or bi-weekly.
The roundup is biweekly.
Yeah. So it's curated, alpha generation quant research, and it's the type of stuff I like writing about. I actually use David's publication as one of the ways I inform the things that I want to look into and start researching. But another cool thing that I'll just throw out there is I'm speaking with a former he's a friend that is at SSRN, and it's possible that we'll be able to leverage some of your expertise and the work I've done, sort of scouring through hundreds of papers and trying to find, the best ones to share sometime soon. So hopefully we can, get a publication that's like co-sponsored with Harmonic Insights, New Barbarians, and Quanted going as well. So that's pretty exciting.
Absolutely.
Cool. Well, that's an hour and 20. We'll definitely call it. And thank you
Lock
very
it up.
much, David.
Thank you. Thank you for having me.
Thanks for coming. Bye.
Pleasure, David. Thanks. Take care, guys.